Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's episode of the Money Talks with Ajay right here on ITV Gold. The show is brought to you by Sai CPS Services, a full-fledged, complete professional accounting firm, multiple locations in the state of New Jersey. They can assist you with any tax-related matters, and not only tax-related matters, but IRS tax audit or even insurance matters. They can guide you in the right direction. So today's topic is going to be taxes and insurance. We're going to combine together, and you're going to find it very, very interesting. And as you know, that Sai CPS Services, they believe in doing taxes right. Refund or no refund, that's a different thing, but the taxes doing right is the key thing, and that's why they have the highest level of customer satisfaction. For any tax questions, no question is a small question. You can reach out to Sai CPS Services at 908-888-8900. That's a 908-888-8900. Or visit their website, saicpsservices.com. In person, over the phone, on Zoom, all kind of meetings are possible, and they're on-hand trained and knowledgeable. And what I call tax wizard CPAs will definitely help you in the right direction. So do reach out to Sai CPS Services. With that note, I'd like to welcome Mr. Ajay Kumar of Sai CPS Services. He's a CPA, CVA, and MBA with over 25 years of experience with Sai CPS Services. He joins us every week in the show to give his input, his advice, his guidance when it comes to money and, of course, taxes. And that really helps all of us. So thank you so very much. Ajay, welcome to the show.
Thank you, Sanjeevji, and thank you for the kind introduction.
You're most very welcome. You know, today's topic is very interesting because every week we talk about money and taxes and everything else. But today's topic is interesting because we're going to have a special conversation on insurance. They said that the smart planning in insurance can be a long-term financial success. And that's exactly what we're going to talk about, Ajay. But before we introduce our guest, I'd like to have your opening line about taxes and insurance, just in a brief, that how they go together.
Absolutely, Sanjeevji. A lot of people talk insurance in a negative connotation. You bring in insurance word and people want to run away from you. People have been using insurance to protect. The new thing, the new way of living is making wealth, building wealth, using insurance as a tool. We have a lot of tools. We have options where insurance premium for your life can be a business expense. We have situations where long-term wealth can be created using PPLI and premium financing insurance plans. So today's topic is less about your general liability, workers' comp. It's more about how do you create long-lasting wealth using insurance as a tool.
Because insurance goes a long way. Insurance is very broad term. And again, as AJ said that, not workers' comp and not liability and definitely not auto, home or, like that, the basic insurance. We're going to have a really good conversation because our guest is going to give us valuable input because the guest brings over 25 years of experience in insurance industry. And they are the insurance agent, Amog Associates, an insurance agency located in the South Plainfield, New Jersey. And the managing director of Amog Associates, Colonel Virendra Tawatiaji, joins us in this week's show. Colonel Saab, welcome to the show. Good to have you.
Sanjeevji, thank you very much for good introduction, and we'll try to do our best to educate your viewers about the subject insurance and how they can build wealth.
I'm sure you will do that because, in person you educate and guide individuals very well, which I am witness to it. And I'm sure on TV show you will do well also because you bring so much knowledge. So, ladies and gentlemen, we have, Colonel Tawatiaji as our guest and AJ, with us, a regular host of the show. So here we are, we're going to talk about insurance and taxes. So number one thing is planning for the insurance is a key thing because once you plan insurance at the right time, right age, and then the right kind of insurance can lead you to a long-term financial success and the peace of mind, right? So let's just touch base upon insurance planning. When should plan what kind of insurance?
So you talked about planning. I just say
I know that
quotation that I use every day.
Yes.
Planning is a process.
Correct.
that should have happened yesterday.
Correct.
Tomorrow is a bit late. Today is the time to do it.
That's it.
Nicely said. Nicely said.
That's his very famous quote that he uses all the time. I mean, it's very true though. It's very, very
And
true.
when it comes to the insurance planning, the best insurance you could only buy yesterday.
Anyway, so let's just talk about today. All right. So today, start giving us a little bit of pointers that what kind of insurance planning, what should do, especially the age gap. Anybody above 30.
Earlier, you start the insurance planning, better
That's
it is
even
for you
better.
because it builds much valuable wealth, and this particular wealth built by the through the insurance is protected from the creditors first of all, and then it can also help you beat the bear market.
Whatever.
So when you are having a problem of taking out money from your stock market investments because the market is down, that is the time that you can take out the money from your wealth which is generated through the insurance because it's not affected by the market if planned properly.
That is a good thing because you have to watch out for that market. When the market is it is in a bull, then obviously it's okay. But when market is bear market, then we should really point out. So let's just say what are the options we have for when it comes to insurance planning. Life insurance is one thing, but beyond that.
Life insurance, basically, people must understand the concept of life insurance. Most people take it as the protection against something, but life insurance is one of the preferred investment in the United States.
Correct.
Why? Because your money grows tax deferred, and when you take out the money, it comes tax free. Besides, if something goes south during your lifetime and you happen to be in a debt, this is the only cash that nobody can touch.
All right, Ajay, what do you have to say about that?
Absolutely. So life insurance, especially the universal, the whole life insurance, historically has been used to build wealth. You can always overfund a lot of these life insurance products, Colonel Saab. So a lot of money is pushed into your own insurance, as Colonel Saab said, is protected from your creditors. Nobody can touch it. You can take it out as a loan against your own policy, which is tax-free. And at the time of death, the death benefit is supposed to be tax-free for the next generation anyway. So it's a beautiful thing. A lot of people misses the point. They hear insurance and the first thing that comes in their mind is they are looking at the term life insurance, they are looking at the general liability insurance. They are not focusing on wealth building portion of the life insurance.
And the
policies.
wealth building, usually comes from, income protection, family protection, and a debt protection. That Colonel Saab talked about it. Now, can we go a little bit deeper and then the life insurance? Quickly just give, the various policies and then we'll move on to the other topics.
Before you go, I want to also stress one more point.
Yes.
That your investment in the life insurance doesn't have to wait till age 59 and a half to take out.
Correct.
You can take it out as and when you require it.
Okay.
It can actually practically work as a mortgage bank for you.
Good point.
You take out the tax-free loan and buy the property. Pay the down payment for your next house that you are buying.
Okay.
Or investment property that you are buying.
But that can be done if you really have that insurance planning started at very early age.
It should have the cash value.
Yes.
And it can be designed. It doesn't happen on its own. Not many people design it well because it's a conceptual problem.
Ji.
Because many people consider insurance as an expense. They will never buy the right insurance. Other people consider insurance as an asset.
Asset or investment.
And which it is.
Yes.
Insurance is not a product. It's a plan. And has to fulfill a definite objective for which it is being purchased or designed. And
The
we do
other
that.
way, the other way to convince our viewers, as I may think of it, there is an auto insurance, home insurance, right? These are the common insurance. Everybody has it. Why do they have it? Because it protects you. In case if something happens to you or your auto while driving, it protects you. Same thing with the home insurance. So same concept applies for the life insurance as well, because life insurance is out there to protect you. Don't think it's an expense. It is definitely an asset, like Colonel Saab said.
It goes one step further. Not only it protects you in case of any mishappening, you can use the same tool, overfund the insurance and create wealth under this blanket of insurance. Let's say, take an example. If your insurance premium is $1,000 a month and you have this whole life, universal life type of insurance product, you can pay $5,000 premium every month. The remaining $4,000 is going into your policy, making wealth, building wealth, which you have the option to invest
Correct.
wherever you want, which is protected from creditors.
Okay.
And you can take loan against it.
Sounds good.
tax free.
Yep. All right. So now, remaining 2 minutes before we go into the break, Colonel Tawatiaji and Ajay, quickly let's talk about insurance planning for business owners. So far, we talked about individuals when we touch upon life insurance. Business owners, what are the best things that you can advise the insurance planning for business owners?
Insurance plays a great role, especially life insurance plays a very great role in successful businesses, the stability of the businesses, and I would say the transition of business to the next owner.
Wow.
Yep, succession planning.
Succession planning.
Absolutely.
So, buy-sell agreement is one of the item that everybody has to do. If you are having partners, you need to have buy-sell agreement. You do not want let's say if I pass away, I'm your partner, and my son takes over my share.
Yes.
Now he's a drug addict. Would you like him to be your partner? But you can't avoid it. If in case you did not have a buy-sell agreement, and you might have the buy-sell agreement, but if you have not funded it,
Yes.
then how do you pay him off?
Okay.
So this funding, because not many businesses, they might have lot of assets, lot of value of the business, couple of $1 million, but there might not be $500,000 even cash available. Because smart business owners invest the money.
Yes.
They don't keep a lot of cash in the bank. Instead of that, you have the life insurance on your partner. In case your partner dies,
Correct.
you can get that benefit and pay it off.
Or even if there is a loss of business, just in case there is a revenue loss in the business,
That's
you
a
can
different
have
type
that
of.
policy
You're right,
covered
but that's a
also.
different type of product. Buy-sell agreement is between the partners,
Yeah.
and the beautiful thing, as Colonel Saab said, is tax deductible expense.
Is that the keyman insurance, what they call it?
Keyman insurance is an insurance that you take for the keyman, for the CEO.
In case if
managing director.
keyman, you lose a keyman,
Exactly.
business owner loses a keyman for whatever reason.
Absolutely.
That is compensated.
That's the keyman insurance.
Okay.
Buy-sell comes with partnership. There are multiple partners. They are buying, the business is buying insurance for everybody. And there is an agreement. If something, God forbid, happens to one person, their shares can be absorbed by the business.
Okay. This seems to be a very interesting conversation, and our business owners, our viewers, or whoever the business owners are, they should really pay attention to it. So a lot more coming your way. Let's just take a short break. You're watching the Money Talks with Ajay right here on ITV Gold. Stay with us. Welcome back to the second half of the Money Talks with Ajay right here on ITV Gold. The show is brought to you by Science CPS Services. This weekly show, Money Talks, of course, in this show, Ajay comes in and Ajay talks about money, taxes, and topics related to money and taxes. And today's first topic is insurance, and that's why we have insurance expert, an agent who has been really taking care of businesses and individuals' insurance in South Asian community for over 25 years, and that's Amogh, AMOGH, Amogh Associates. That's the company located in the South Plainfield. They are insurance agent, licensed professional insurance agent. Their website is Amogh, AMOGH, associates.net, and we are so thankful to have Colonel Virendra Tawatiaji with us. With that note, let's move on to our topic, which is insurance, and we're talking about insurance. So right before the break, we stopped at insurance for business owners. As Colonel Tawatiaji said, that business owners, if they really plan out certain insurance, can really, really help them a lot and can save from any uninvited troubles that many times the business owners face, either individually or with the partners. And that's where we're going to start from now. So AJ, you take a lead about that insurance where we stop the partners.
Absolutely, Sanjeev ji. So again, we want to remind our viewers, the insurance we are talking about is not home insurance, auto insurance, your general liability. We are using insurance as a wealth building tool. We talked about certain insurance products where the premium that you pay is tax deductible expense. In the first half, we talked about buy-sell agreement. We talked about key man insurance. If you have employee insurance of any sort, that's also tax deductible. And insurance in general that you're buying for the business, where business is the beneficiary. The key is business has to be the beneficiary of the proceed from the insurance company. In that case, the premium that you're paying becomes tax deductible expense for the business.
All right. So, Colonel Saab, anything that you like to add in that buy-sell?
Yes, in the businesses, one of the key issue with the employees, with the business owners is to retain their key employees. Now, to retain the key employees, they have to ensure they give them some kind of a incentive, and key man insurance is one of the main incentive that you can give, and you can do it tax deductible to your business.
Very nice. Okay.
Further, one more thing. The premium that you are paying, you can get this premium also back as if you go for a split dollar arrangement. So various ways that key man insurance can be designed, and where at a $0 expense, and you can retain your best employees forever in your businesses, because remember one thing, your business income is dependent directly on your good employees, those who bring revenue to the company.
Okay, very well. What about employee benefits insurance?
So there are a lot of insurance products where if an employee, say, happens to not perform for some time because of the maternity leave, because something happened or some small accident happened, in that case, the employee is going to get some benefit through the business, and the premium that you are paying to the insurance company on behalf of that employee is a tax deductible expense as long as you're doing it for everybody in the company with the same formula, with the same policy. Meaning, if you have 10 employees, to keep the same policy for all the 10 employees to make it a qualified plan, and in that case, the premium that you pay becomes tax deductible business expenses.
Okay. Now let's talk the most important thing. What are the common mistakes, Colonel Saab and AJ, that you have seen that people make when they plan insurance?
One of the common mistakes which is a result of perception, as I said earlier also, if the perception is that insurance is an expense, then you will make a mistake. If the perception is that insurance is an asset, you will always be benefited by the insurance. Secondly, consider the benefits and not the cost, because if you are considering the cost, you are missing out on the issue of the insurance, missing out the plan of the insurance. So these are the mistakes. And then secondly, delaying it. Procrastination is the biggest enemy of good insurance. I have seen people in the perfect health, and they said, okay, I'll think about it, and by the time they think and make a decision, then you come to know that A1C is now 7.5, 7.2, 7.3. So the policy which they would have got at the preferred best rating, now they're getting a table B or table D, which is 3 or 4 times premium.
I'll add 2 more things, Sanjeevji, for you. So the common mistakes that we have seen in the practice, people coming to us, oh, I did not know I was supposed to be buying workers' comp as well. They have the payroll, they have the business, and then the excuse is we did not know what we did not know. The system wouldn't consider it. You have the obligation to buy the right insurance. The second mistake we have seen, people have been using insurance to protect. And the key word here is protection. Everybody talk about, I'm trying to protect my assets. I'm trying to protect my business. And this is not how the life works. Until you get to a point when you're buying the insurance to build wealth, and the key word here is building, creating wealth, you are on the wrong track. As long as you're using the insurance to protect only, it's only half the battle you are seeing.
Very interesting. These are the common mistakes that people do make, and Colonel Tawatiaji and AJ really put on a very solid points to avoid those mistakes. Now let's continue this conversation and let's take it to the next level. That how CPAs also really can be part of this insurance, and they can also make a difference in one's wealth. Basically, it's a wealth. So advanced wealth tax and financial planning strategies, let's just touch base upon that. And one of the most important thing is the private placement life insurance. This is called PPLI, and this one is a very interesting concept, and our viewers should know more about it. So AJ will take a lead on that topic.
Absolutely, Sanjeevji. So PPLI, or private placement life insurance company, gives you an option where the life insurance premium is placed with a private company, not with a big insurance company. Not only it gives you a lot of flexibility at how much premium you can give, and you can overfund the insurance, it allows you to invest money into a choice of your vehicle. You decide where you want to invest. You are not at the mercy of the insurance company where they are deciding where the money has to be invested and then telling you at the end of the year how much money you made. You decide where the money needs to be invested. You decide which private company you are going to be choosing to hold your life insurance. And generally, it's overfunded insurance. The technique is typically used to create wealth or pass wealth from one generation to next generation.
This seems to be a very, very interesting topic, and I think there is a lot more to cover on this topic. So why don't we pause right now, and then maybe in the second part we'll have more detail on this one, as we are pressed for time. We have a little less than 1 minute to go. So AJ, thank you so very much. But in the next episode, part 2 episode, we'll definitely start covering these are the things for the advanced wealth and of course tax financial planning, tax strategy. So we're going to cover that. Before we leave, Colonel Tawatiaji, I just want you to ask one question. Let our viewers know about Amog Associates quickly.
Amog Associates has been in the business for over 2 decades, and between me and my partner, together we have over 50 years of experience. We have been doing all kind of insurance at Amog Associates, right from your auto insurance to long-term care insurance, and we do investments also. So if you need any help, it's a one-stop shop, and we discuss the subject in great detail, tell you the pros and cons of everything that you need to know before you spend your first penny.
All right, so it's advisable to give them a call and set up a complimentary meeting, and they will guide you. If you have all the insurance and policies in place, they will tell you you don't need anything. That's how they are honest and loyal to their customers. But if you really need something, they will advise you to get that. So check them out and give them a call. 908-941-5248, I believe, is the number, right? 908-941-5248.
Yes. Remember
it by heart all these years. All right. Thank you so very much for being part of the show. Thank you for your valuable input on insurance matters, and we have a lot more to cover in the future episodes, which will definitely do that. AJ, as always, thank you so very much for bringing so much knowledge and putting it together when it comes to taxes, money, and insurance, and a lot more. When we see again next week, we'll have another episode on this or the other topic. AJ, thank you so very much again. I am Sanjeev Pandya, wishing you all happy and tax-free but insurance awareness days. So look into your insurance policy and make sure that you have the insurance. Until we meet again, same place, same time, so long.
Thank you.